Greetings, market rebels. Welcome to this week's macro measure combined with sector situation. It is actually the 10th, Friday the 10th, and it's about 25 minutes after the bell here on the East Coast. But I'm going to keep it at labeling it for Sunday, which it normally has been made available in the past, and hopefully that will get it out sooner than that. Anyway, here's our trusty disclaimer from Market Rebellion. Here is our trusty intellectual property rights notice from Market Rebellion. And on that note, we should be able to move into last week's quick review. And on this, we're not going to spend very much time. Basically, we decided to go quick and dirty again because of circumstances that have persisted. And I keep making advancements, but I'm not completely there yet. So we have another quick and dirty approach this this weekend. But like I said, hopefully that will be limited in terms of more weeks. It should be just another week or two. I've just got a lot going on, and things are just out of order. Anyway, we came in really with the main expectation that was almost impossible to pass up, that in a news neutral environment, we thought this week would bring about ascendance resumption attempt, and it did. They just didn't give us much of a chance to really trade that because they had things really busting out of the gates on Monday morning. Unfortunately, that attempt began, but I believe we did note this, that we then would wait and see how things behaved from that point. And will they bring it back in? If they ran it up and through resistance the way it looked like they were about to, we'd have to wait for, does it back up and then hold at former resistance, convert that to support, and then try to go? And that did not happen. So that's where we use the line, bigger problems if we do not, which I'm sure a lot of you will remember. Anyway, I'm still expecting, as I noted last week, I still expect this year to be a lot more challenging really than 2024. We said we wouldn't sleep on risks, and we wished everyone a healthy, happy, and prosperous new year. That was last week, keeping it brief. This week, it's very similar. Sticking with quick and dirty again. We'll go through things very similarly to how we did last week. We are on the cusp of bigger problems if we do not. So, which we'll cover. I think that's the main thing now. The gang's got us in a situation where things are looking very challenged, right? So they went last Friday or last weekend from looking, okay, it looks like they're going to try to put a pop together here. Unfortunately, as I said, they did. They did it really very quickly on Monday morning. It wasn't really easy to trade. You could have got in maybe after the gap up and gotten a little bit of push that way, but that was really the high for the week in most cases. So they didn't give us a lot to work with, and it was a mighty move, just not didn't play out ideally. I'm still where I was last week. Just expect this to be a lot more challenging. I would definitely not be sleeping on risks right now. Again, I would reiterate that I would know how to play D, the very least, if not get aggressive about making money to the downside. I haven't, you know me, I haven't gone full bear where I'm pounding the table saying you got to get short everything out there and go long the inverse, this, that, or the other thing. I'm just saying that the possibility certainly has increased in my mind, given that that breakout attempt was reversed hard this week. Are we getting the right share here? Yeah, I think we are. Given that, that's our problem, right? That really failed. So we'll cover everything that way on the charts. We talked about the semis last week. Of course, we'll be doing that this week. They delivered the false breakout that we were noting, right? You've always got to watch out for that. And so a lot of times I'll put out these reminders, and in a bullish market like 24, they don't really carry the same weight. But when you get into a more challenging market, like we've seen here lately, it definitely pays to realize that you shouldn't become a full believer in the breakout. It could be a false breakout, and just keep that in mind, right? And manage accordingly until you really, really start to pull away and you see some signs that the market really is starting to rock and roll to the upside in a forceful way. Anyway, that false breakout quickly descended right back to support, which it did not hold. It was hoping to turn it to form resistance to support, did not hold. Mega caps were very similar to those semis that we just discussed, so that's not a good situation. Many sectors that we had noted were arrested from their descent. They resumed and took a turn for the worse. So they resumed dropping, or they took a turn for the worse. The major holdouts, which were XLK and XLC, are now at risk, in my opinion, and that's a change. And something we've covered most weeks, but haven't been spending much time on it thanks to quick and dirty realities, have been the dollar and yields. And it looks like the inflation worries are bringing about rate reduction worries, right? So yields are heading up. The dollar's been strong. Normally, these are not great things for stocks, especially things like IWM. And I think that's really starting to, and has been radiating across the market. So it's just, as we noted, breadth was getting clobbered a while back. We then got that December ugliness that continued to sort of crush breadth. But then that started to improve a couple of weeks ago, and things were looking a little bit better, which led us into last weekend thinking they could try to put a rally attempt together, and then we'd have to see how well it held up. And then that happened as well. But breadth really took it on the chin this week, as did many sectors. So breadth got rocked. The VIX looks primed. I mean, that's my question. You've got to decide if you think it looks primed, but I think the VIX is primed. Doesn't mean it will go, but I think there's a good chance that it might put something together here. Gangs got their backs against the wall, basically, and they can't afford to let any more weakness develop, or they could really bring about more forceful selling, and selling begets selling, and that's how you get bigger pullbacks and or corrections if we really get something serious that develops. Anyway, these concerns, I think, are radiating across the market, and I think you're at DEFCON 1, and if I'm still all bullish all the time, you might want to think about, if you're in that camp, you might want to think about blanking on the spark plug, the old I think it was it War Games reference that we talk about all the time with Barry Corbin. But yeah, that's where you're at, because it's getting dire. I mean, I think technically it's getting dire. So let's do a brief pause, and then we will come back to the charts, and I'll move this off to the side so it's out of our way here. So let's get this out of the way. And why is that still up there? I don't want that there. And hopefully they're not going to fight with us when I bring this chart up. We're switching to a different screen, screen 4, and hopefully there it is. Good. All right, so we're back on screen 4. We're looking at the SPY. And what I'm actually going to do is flip out of this quickly. I'm going to flip over to SMH, because this was one of our focal points, and we thought coming into last weekend, we thought this looked good to go. And then it just, I even think I said it, is it too easy in one of the webinars, or maybe in last week's video, or in both, I don't know, but I do recall saying that. And we had this pop from 251, call it 252 on the close, up to 263, right? So you get this really a 4% move up right out of the gates, right? You gap up, boom, they just drive it higher. And that was probably your best opportunity to be bullish in not only in SMH, but in the market, was on Monday. Naturally, with President Carter's funeral proceedings, we only had 4 days that we were open this week, but you can see what happened after that. This was an ugly reversal. We came back to that former resistance we talked about, thinking, could it become support? Held on day 1, played games on day 2, but today, right, we kind of got the answer that no, it couldn't hold. Doesn't mean it's completely over. As you can see, SMH is on the one dash white line is 100 on my charts. Your 200s down here dovetailing with that support line that we've had in there. So that's probably where I think your bigger support is. You may as well just spit this close out here at 242. So you're down another few percent. Breaking down below there could also create a false breakdown. to counterbalance this false breakout. Remember, they know that a lot of people are watching all these things. It's not just us and them. Credit to the great Rick Wright on that one. But yeah, it's everybody, right? We all know, or should say most of us know, this is a really important sector. And it's obviously been a massive driver, and everyone knows the NVIDIA story to a degree. So there you have it. What happens next there, we don't know. What I would say, though, is that a lot of people that bought this are clearly got spanked, right? If they didn't play it smart and get out because it wasn't behaving well. And now you've got to hope that this holds here if you're along, right? If you're still bullish. I think it's starting to turn. I mean, it's not there yet. I don't think this particular instrument is really in big trouble yet, but you could see just how close. You're one session away from being in big trouble. So much like the rest of the market, I would just go to DEFCON 1, because if this weakness persists, and it really was an ugly week, because let's just bring up, we'll bring up the Qs for now. And you can see it's a very similar situation, right? Where good start to the week that completely unravels. They can't hold on day 2 of the week. They couldn't hold above that support line, what could have been a support line. They couldn't hold above that. Oops, it's giving me trouble here for some reason. This white line that I'm turning blue. You fall below there, you fall down to the 50 in the Qs. That holds for a day and a half, basically. And then on Friday, when we resume, they plunge right through, and they're right back on the support line that we've had in there. So now, right, you've got the lowest low of the week being made today, and you've got the 100 again coming up here, and a flat line, if you ask me, somewhere around that 497 level. And as I said, I think I mentioned this last week, that I put a lot of bearish ideas in on these major index ETFs, so folks would have ideas at the ready, right, if things did start to break down. And so I think the potential's there. I mean, this is not the kind of action you want to see if you're a bull, and you really just got rejected so hard and with force, right back to new lows for obviously the year, which is relatively new, but also you haven't been this low in a few months. So it's getting there. It almost seems like it's setting up more for a test of the 100 or the 150 or the 200 as we sit here right now. I think it will probably take some news developments to prevent that from happening at this point. I mean, I think, in other words, I think the odds favor they follow through a little bit more here, and this has been what I've been writing about in a lot of the ideas is, and it's been going on for 3 or 4 weeks, is that we have to prepare in advance, because UOA tends to be bullish. It's very hard sometimes to get your hands on good bearish paper. Excuse me. So when I think that there's issues in the market, I try to get bearish ideas in, even if they're premature, because knowing that maybe things aren't completely sorted out, I want to have trades there for our traders, for Market Rebels to be able to go to. And so we've done that in virtually all the major index ETFs, some sector ETFs as well. But of course, there's individual names that we have bearish ideas in as well. But a lot of times folks like to trade bullishly in individual names and get outperformance, which I wouldn't fault anyone for. I think it's a smart way to go. And then they like to hedge or go bearish using these types of instruments, which is also, to me, like not a bad move. But I think this is not doomed, but it is very close to having a technical profile that tips from being bearish to quite bearish, if you ask me. So I think that's why you've got to be at DEFCON 1, because this could happen quickly. Now, if it's a negative news driver that's legit, has staying power, then I think you could have a very quick and forceful breakdown. If it's sort of happening and the news is lukewarm, negative, nothing special, I would expect there to be games played quickly. Dip down below, bring it back up. If you look at probably a better look would be on the SPY, where I think we have a channel drawn from last week, or we did have a channel drawn from, was it diamonds that we had the channel drawn in? 1 second, let's see. Okay, I'm starting to lose it. I could have, it can't be just IWM, right? No, we had it in SPY. What happened to it? I thought we had it in SPY and Qs maybe. Well, I'm gonna check one more time and just see if, no, it's not there. Well, I don't know what happened because I could have sworn we had a duplicate drawing. I could have sworn we had another line like this, but something happened to it. Maybe I clicked on it by mistake, but I just want to give you that general idea, that just give you the visual on the channel. And if we did this in SPY, I think that's why I was going there. It's a little more clear. But let me get this to duplicate and put this down here. And I'll do this. And then hopefully you all can see that. I'm probably going to move this a little bit closer. Oops, come on. Let me move this just a little closer. This is less than ideal here. Am I losing it? What am I thinking that had this? I feel like we had this channel drawn a few places and now it's not there. Now it might have been on another chart, so I'm just going to let it go. But the point is, right, we're not too far from being towards the lower end of the channel. So if we have one more sort of ugly opening to the week, note the turnaround Tuesday this week. You could have that old turnaround Tuesday where they, use their guile, their moxie, their craftiness, and just put together, a squeeze after pulling people in that are shorting new lows or panicking their way out of the market breaking down below the 100-day, which it clung to here on the SPY. You're very close to the 100, 580.56, and you closed literally 7 points or whatever you want to call it, 7 cents below there. I mean, it's an index. So yeah, I mean, you're really close to breaking down below the 100. Interestingly, the gang made sure it held right near there. So we'll see what happens. But again, this to me, if you look at all these, and I don't want to belabor this, but if you look at all of them, there's little differences here and there between all of them. And the diamonds are even worse off, as we've been saying. They're closer to the 150. They've already broken down below the 100. We talked about maybe international and other factors that are probably causing problems there. But you are making new multi-month lows. This is looking rough. This does look like this support line that we've got in here that's long term, and this one here, the 200 in purple. They look like they could factor. I mean, that clearly, one or two rough sessions in a row to start the week would get you there without a big problem. So that's further along. The Qs right there, probably a little further along with a new low. They made a new low. The SPY, that is making a new low, right? So these are all not quite at the 150 in rust, the way the diamonds are, but they're all making a new low. But you have to be, I think, beware that you're getting towards what could be the lower end of something. And you might just not be, even if we do get, if let's say by the end of, I don't know, January, we have this really rough January that turns out to produce a double-digit correction from the high, right? Where you come from 60, it would be about 61 points from there, right? If we dropped. So if you drop 61 from there, you're looking at dropping another 30 points, I guess, roughly from here, something like that, from today's close. That would put you down here, towards the 200. It would be sort of like it would exceed the 200 a little bit at this stage for sure. But if you got that, right, you get that sort of 10% pullback from the highs. That would be, interesting. It would be probably in the long run, maybe not such a bad thing, but you would, I think it would rock a lot of people if this were to happen out of the gate, given how you couldn't find many bears left, which again is often the case. And that's one reason why we tried to sneak that mention in. But this is so close to just getting worse quickly is the point. I think that's the main takeaway. This could get very ugly very quickly if news spurs that on. If you just get, just left to its own devices or whatnot, its own vices, maybe earnings will start spurring this back up. The gang will use earnings to pull us out of the nosedive. Maybe the gang is getting the nosedive in now in anticipation of being able to jam right back up with the earnings season, as they often do. We'll see. All right. It's always, the gang's usually pretty crafty about what they do. IWM new low and it's at the 200. So once again, we were in the camp of there's so much potential here, just like Tom Lee. We were talking about that, and we got this massive run. I think Tom Lee started talking about it back here. Ultimately, got this massive run, but it really couldn't break out. We were talking about that 245-ish level. Couldn't break out and go from there. And look at this pullback ever since. And you'll note, and I don't want to mess up the charts, but you'll note right now that one of the big issues here is the fact that yields have continued to ramp, right? If you look at this chart, and we've made this case, it's not like we're the only ones that know this, but it's pretty old school stuff and basic stuff. But usually you get the rising yields. That's not going to be good for stocks typically, right? When interest rates are high, because people start shifting out of equities, which puts pressure on equities, and they shift into these types of instruments, right? They into treasuries. So this is maybe not done yet. It's certainly stretched now. You've got a 76 reading on RSI on the yield here, on the 10-year, and you're outside of your Bollinger Bands. Remember, this isn't an instrument. It's really just the yield that's being calculated for us here through the TNX. But the point is that this is really ramped. And if you notice, right, when did this start to really go? That was mid-Sept. And if you look at IWM, mid-Sept is probably mid-Sept is when IWM is right about here. IWM didn't do much in the early stages of it. It finally was able to put things together when they thought they made it sound like everything was coming up roses. The election was supposedly what Wall Street wanted. Powell was doing what they wanted. Everybody follows the news and thinks this is great. These are great times, and you really have a hard time finding bears at that point. And then lo and behold, right, the yields continue to rise, and you get this really ugly situation that develops. So this is at risk. Clearly, though, right now you are getting down towards deeply oversold. You're at 32. You're in a long-term uptrend still, but you're getting towards deeply oversold if you're in a bull market. Excuse me. If you're not in a bull market and things are changing, there's a lot more potential, given this whole leg lower, there's a lot more potential for this to drop down right at this point. So this is how things change. So this also looks rough. Could you argue that it should support at the 200? And if it does, it should bounce? Probably. You probably could do that, but it's kind of premature. I think you have to wait now. So you can see we're at the state of things. And these are all, by the way, I think all these are really close to where a situation where the technicals could really get much worse, very quickly. And they could just get much more worse. So I think you really do have to be on guard again. And that's why I'm hitting on DEFCON 1. Let's look at the dollar, and you can see that that's probably not helping stocks, because it looks a lot like TNX, and you can see that yields are rising, the dollar's strengthening. So again, not a good thing typically for stocks with both of those going up. I think other factors sort of masked these developments for a while. The election hype, the Powell being Wall Street's buddy, that kind of thing. But now the reality of where we are with the dollar, where we are with yields, that seems to now be being, I guess, recognized, and you could maybe say respected or appreciated. And so you're back to levels that you haven't been to in the dollar since 22. You're getting back to 2022 levels. So that's quite a bit, right? You can see this consolidation, and you've broken up and through. So this is kind of wild. Other things that happened this week, we had some good, recently had some good paper on the bullish side in oil. And we also have had recently, just this week, and I did put some long ideas in. I don't know how well they did, but did put some long ideas in this space in the metals, precious metals. And I thought the charts were still looking pretty bleak, but there were some constructive changes that led to things. So it did end up putting a little something together. So that's interesting. But I mean, I think that's related to inflation concerns that are, again, I think radiating in different ways. The other thing that would be, excuse me, I just can't get over this situation. Luckily, I'm going to my doctor next week after the bell one day to have him hopefully help me. Anyway, excuse me. Anyway, you can see that XLE also had a good run. So these are a couple spaces that definitely started to work, and a lot of this I think is related to these their own issues, but also inflation and just the way folks are repositioning, et cetera, et cetera. I think we should also look at the sectors now, and hopefully you'll be able to get this from just me maybe enlarging things just a little bit. Here's the typical grid of 12, and I think the first thing I want to highlight is over here, which is XLK and XLC. And those were really stalwarts, right? They coming into the week, we thought they were holding on pretty good. They were two of the better looking sectors, aside from what we talked about with XLE in the paper and maybe a little bit better of a chart. But these really had a rough week, as you can see. And so that is clearly not good with two what were leadership stalwarts starting to come under that kind of pressure. As I already noted, XLE did its thing, but even financials, which could usually you get hopeful stuff happening as they're some of the first to report, and you normally can get this hope that you'll get, oh, there's going to be some good earnings, and they have this pre-EPS run. They cap that with a burst on the announcements, and there's jubilation, and then of course that often becomes a sell on news trade. Really, if you catch the pre-EPS run, you can hopefully trade the other side of it with so-called house's money and play that short side once you start to see things develop technically on the other side of the EPS announcement. But look, financials, new low, real estate, new low. We had a position, I shouldn't say position, we had believe we had an idea in here. We had one in XHB. The defensive sector XLV hung in there, but defensive sector XLP did not. So this is really rough. So Staples really took it on the chin. And you can see that even the discretionary is at risk. So discretionary is at risk. This closed near the low of the week, closed at its lowest low, not only for the week, but in some time. And with the gaps and so on and so forth that it's got in it, big problems potentially, right? If this thing starts falling apart. XTN, which was giving us a little bit of encouragement, they did the old gap and then they sold into it, right? So pretty much spent the week selling this back off to where it came from, right? So really not a horrible week, held up better than some, but not really encouraging either for me, my taste. XLB basics near the lows, right? XLI, these were things that were crushing it. I think I think international issues are crushing these now. These look very similar as they have often, and these are potentially problematic, right? They are on the cusp of a possible breakdown, and the resilient, right, and really uncharacteristic bull performer XLU utilities, they are kind of lost their luster a little bit. Corrective action, holding on. You can see the shelf they're on right there. And boy, it wouldn't take much, right, for that to roll over again and then start making new lows. But at the same time, they've held it. So you may, if you look to trade it, it's not a greatest trader, but I guess some people are trading it. Why not? You're not far away from a breakout, but I think you probably want to see the market in better shape. Things like that. You want to see the risk situation improve. So that's a quick look at a lot of the sectors, and what I'm just kind of drawing out from that. This was also the old Bitcoin. We were looking for this was really starting to look good, and it too had a very similar performance. Other than today, it got its act together and bounced off the 50. So that's a little bit of an encouraging sign. We'll have to see where things go from here, but it could very easily be right back in trouble. You've got a gap over here. We were kind of looking at this like a lot of people do, of course, as risk on, risk off. And right now, it's probably a little bit more risk off, but this can change quickly. It could become very risk off, and it could also become very risk on quickly. We know how this space can get at times, but yeah, right now you can see that if you want to draw anything from it, the last, say, month or so, it's been a little bit of caution ever since that high got put in, so that exuberance or zealousness just isn't there the way that it was. And there's nothing wrong with that after the nice run that it had. I mean, it just corrected, it found the 50. Let's see if it can hold on to that, go from there. But that would be an encouraging sign if it can start moving its way back up. And as I said, people will interpret that, I think, as more risk on, and you might get at least a relief rally from where we are here and also across the space, but of course, across the market a little bit more too. I think it makes it a little bit better that way. What I want to cover, though, is the Apple, Amazon, you know where I'm going with this, Google, Meta, with reformed Mark Zuckerberg, with his publicity campaign that he's launched lately. I don't know how many people he's fooling, but you just never know. Anyway, on this one, this may have been where this actually is what I was thinking of. So on the mega caps, this is where I guess I had this drawn, and I thought it was on the SPYs accused at the very least too, but it wasn't. But you can see that these are cycling down towards the lower end of the channel that we're working with. And so because of that, right, you can't be shocked given, right, how much of a decline we've had so far if they try to put another cycle right back together, back up here, right? If they do plunge it a little bit more, excuse me, it held on to the 50. As you can see, they bounced it right back above the 50 after feigning a break below the 50 there in that yellowish gold color. So that's where that ends up. But this is obviously, it's looked better, and losing the 50 probably brings you, sure, there'll be flatline support for the whole group here and there, but I think your next big level is clearly, and it's a pretty wide chasm there between the 50 and the 100. So that would not be great, right? But look, in the grand scheme, after the run that this stuff has had, right, from those summer lows, you've really had an incredible run. It really wouldn't be, and it really shouldn't shock any of us, I think, if there's a little bit more corrective activity here. And I do think it's vulnerable for that. The best thing I think it has going for it right now is that it's near the lower end of this channel. So, and they've got the earnings coming up not too far in the distant future to start working with to kind of repump or rehype things back up again. So you've got that. Whether they can do that, will do that, I do not know. But I'm just saying, if we look at the calendar, which is the reason I like to try to see what they're doing in terms of the calendar, just because I know that they use the calendar for cover, right? So I try to look for things that could really give them legitimate cover for moving things back up forcefully. And what that could be would be some kind of a earnings related situation. Now, let's take a look at I want to take a look at you know what, this is not helping us. Let's switch to SPYs. But what I would look at now would be, I think here, and we said breadth was getting better, and it was, but guess what? It's really taken a turn right back off again, right? Which is sort of telling you you're in a downtrend. Your intermediate term trend has definitely been down. Things are not acting well yet, right? You might get back down towards lows in some of these, and maybe that'll be the end of it. But as of right now, the snapshot we have to work with, you can just see SPYs are up top, and you can just see this was not a good week for market breadth, not a good week for sectors, not a good week for the dollar, not a good week for yields, right? Not a good week for mega caps, not a good week for the semis. All these things that we keep an eye on have really taken a turn for the worse, and that's why I'm at DEFCON 1. I think you have to be. And I also think I would add that this looks primed to go. you can never know. The VIX is, I'm long the VIX as a hedge, but and you just don't know. But once this thing kind of does, it usually will do like a little bit of a initial pop, and then it dips, and then it comes back for a second go. That happens a lot with this thing. That's one thing I've noticed over the years, that you almost don't want to be in on the first pop higher. You want to wait, and hopefully when you start to sense that it's starting to go again, get in for that one. That way you're not really getting eaten away by theta too much. But sometimes you can play it a little too cool for your own good, and that you miss out when there really is, you could have gotten in cheaper. So maybe you do a half and half type of a thing, where you buy some because you think you should, and then you try to get slick with your second purchase to get great timing on it. Just a thought. Anyway, this looks primed. I mean, you can see once you get beyond, oh, it switched over on me. Once you get beyond the 20 level up in here, it can often like take the next jump, up towards the mid 20s and then towards 30. So you're getting close to that. It's rounding up nicely. There's definitely been, if we put a line under here, should it allow me to do that? Right there is not a bad one, I don't think. You get the idea of what the trend of support has been. I think that's really where support has been, and it continues to trend higher. So support is trending higher, if you will. And that to me is indicative of something. So we'll have to see, right? Where this is notorious for feigning breakouts and things like that, but at times it does go. It goes very quickly and forcefully, and you can get some good scores in on that. So on that note, so I think that's pretty much a wrap. If we're doing a quick and dirty version here, which is what we are doing, I do think you got to be at DEFCON 1, market breadth, everything we covered. You can see that it's been getting rough here, and just keep in mind that after the kind of run we had in the megas, after the kind of run we had in the market, not to say this is going to be a horrendous year. It just, you can't rule out that a decent, and I'm looking at the wrong chart. You can't rule out that a decent pullback or correction, you can't rule that out. And probably realistically, that's what typically would happen, where you get something deep and something like this, right? Where you have this big drop in a short period of time, 565 to call it 510, right? So that you're down 55. So that's about, that's about 10% roughly. And I think that's what we're talking about again. If we get this now, news, horrible news, right? Which this world seems like it keeps perking on, but doesn't ever follow through in the worst ways, thank God. But at some point, you would think the odds will favor really horrible news bursting through here or there, because that does happen at times. And if that does, you could get a lot more than that. I don't know what that would be. I really don't know, but it could be, there could be something out there. There's a lot of psychopaths in control of a lot of levers of power. So unfortunately, that's just where we are, I think. And so we have to face that reality. So again, that's why my play defense, learn how to play defense. If you don't know, just learn the collar, watch a video, Market Rebellion this weekend, about the collar, at the very least, and then realize you can do a collar not just on long equity, but you can do a collar on stock replacement calls as well, right? So, and the good thing about the collar is that you can do it cost-free practically if you want to. You can even take in money if you want to on the collar, and it doesn't really hurt you theta-wise. And you can, depending on how you structure it, and you can always roll it out or put it on for a longer duration if you want, all those things. So that can be very helpful. So on that note, I think I'm going to wrap up, because we are doing a quick and dirty version here. I do hope that something I share with you helps you out this upcoming week or some week in the future. But keep your game face on, know what's going on here, and realize that we're really playing with a little bit of fire in this market right now. So everyone, take care. Have a great weekend if this gets out sooner than later. And I wish everybody the best. And thanks again, as I said, for tuning in. Take care.